The love market will always exist. There will always be people looking for dates. And as it happened with every aspect of modern life, romance was also digitalized and commoditized. If in the early 2000s people met each other at college or at a party, at some physical place, now it has become increasingly the norm to know other people through apps like Tinder or Bumble. And I believe this is a growing trend. That's why I started to look for companies like Match Group and Bumble, which are the main players in this segment. Both are good companies with very scalable business models and recurrent revenues, and both stocks have been on a continuous downtrend, as we can see here. Match Group stock fell around 80%, while Bumble stock fell since its IPO 86%. But the thing is that these businesses are alive and have been progressing while their stocks were being decimated. So would this be an opportunity? Well, maybe yes, and that's what we are going to address in this video. First, we will talk about the differences between these two companies, and then we will compare the upside of each one. And in case you want to watch just a specific part of this video, you can click on the chapter you desire, okay? The difference between these two companies begins with the size. While Bumble is a $1.3 billion market cap company, Match Group is almost 7 times bigger, with a market cap of around $8.5 billion. Furthermore, Match Group is much more diversified, owning almost all relationship apps out there like Tinder, Hinge, OkCupid, and Plenty of Fish. So initially this makes me prefer Match Group over Bumble, as Bumble is more like a one app only play, right? After all, most of Bumble's revenues, around 80%, come from Bumble's app. And that's the main risk of Bumble for me, their lack of diversification. Because, well, if Bumble's app gets outdated, well, they are done, right? And I just don't like to place all my cards in one single bet. On the other hand, to own its product portfolio, to own all these websites and apps, Match Group had to spend quite a lot on acquisitions, which were financed through debt. And that's why their current levels of debt are high, at almost 4 times net debt to free cash flow, which means they would take almost 4 years of free cash flow to pay all their debt, which doesn't look nice. And of course, this will affect their growth capacity, as they need to spend less because of their already high financial leverage. Bumble, on the other hand, operates with much healthier debt levels. Bumble also has been growing faster than Match Group in the last 3 years, on average 22% per year, while Match Group has been growing at 12.4% annually. But even though Match Group trades for higher multiples, at a price to sales of 2.6 against Bumble's 1.25. And here you can say, oh, but Match Group trades for higher multiples because Bumble is not a profitable company, right? Because there's no PE here, and this happens because there are no profits. But they are almost there, as we can see here. Their operating margin has been improving a lot. They improved from negative 18% in 2020 to 5.1% positive last year. Their net margin in 2023 was just a little bit negative. They were almost profitable here, and I think they can reach consistent profitability as their revenues grow, because you have a lot of operational leverage in this kind of business. And the most important thing, they've been generating cash consistently, and their operating cash flow margin has been improving a lot, as we can see here. It fell from 20% to 9% in 2020, but since then it's been recovering and now stands at 17.3% operating cash flow margin. Match Group, on the other hand, has bigger cash margins, right? Okay, so what's the conclusion? Well, Bumble, smaller company, less diversified, therefore riskier. On the other hand, it has less debt, it trades for lower multiples, it's growing more and its margins are improving considerably. Match Group, bigger company, much more diversified, but has more debt and trades for higher multiples. Okay, but which one is a better buy? Well, to answer this, let's do some valuation exercises. But first, if you are enjoying this video, please hit the like button and consider subscribing. Oh, and also, this is not investment advice. Okay, so let's think about Match Group first. Match Group has been growing at 13% per year, as we can see here actually, right? So, do you think it's reasonable for us to count on a 5% growth rate for Match Group for the next 10 years? Because I think it's quite possible for them to deliver this. So that's what I'm going to project, 5%. Their free cash flow margin also stands on average at 23.1%. So do you think it's reasonable to project that in the next 10 years they will be able to deliver a 15% free cash flow margin? Do you think that's aggressive? Because that's well below their historical average, right? So let's project 15% here. So this means that the fair price for Match Group is $20. So the stock would need to fall 40% to reach its fair price. Oh, but you considered very pessimistic premises in your model. Yes, because that's what I want to do. I want to buy good businesses trading at low valuations, at low expectations. Now let's do the same exercise with Bumble stock, right? So Bumble has been growing at 20%, 21% per year, right? So let's consider for the next 10 years a 5% growth rate, right? Do you think that's possible for them to deliver this? Because I think that's totally achievable. So 5% growth. Bumble has also been delivering, on average, a 13.3% free cash flow margin. Actually, in 2023, they delivered a higher free cash flow margin at 16%. So let's consider in our projections a 10% free cash flow margin for the next 10 years, okay? So this means that the fair price for Bumble stock should be, or is, $11.92, right? Which would represent an upside of 17.5%. And let's remember, we used here completely achievable premises. So for me, it's pretty clear that in these prices, I prefer Bumble over Match Group. Match Group may be a much more diversified company, but their debt eats out almost all the upside. Bumble, on the other hand, seems to offer more margin of safety, as it's being priced at very low expectations. And you, which stock do you prefer, Bumble or Match Group? Well, tell me your thoughts down in the comments. That's it for today. See you next time.